Welcome to the Compliance Officer's Playbook podcast. Today, we're going to be diving deep into MiCAR. Now, you might know it by its official name, the Markets and Crypto Assets Regulation. And, you might be thinking, okay, another regulation, what's the big deal? But trust me, this isn't just some, minor tweak. MiCAR is a huge shift. It creates like one set of rules for the entire EU. Think of it as like a unified playbook that replaces this patchwork of all these different national laws.
Yeah, and it's not just about bringing the EU's crypto regulations up to speed. It really is setting a global standard, something that we haven't really seen before in this space.
That's right. And for you as compliance officers, this means understanding MiCAR is absolutely crucial. So let's unpack this, shall we? What exactly is changing and why should you care?
Well, MiCAR tackles a few key areas. First, it moves beyond just preventing money laundering, which was the main focus of previous EU legislation, like the 5th Anti-Money Laundering Directive.
Like the 5
Yeah.
But MiCAR seems to be casting a much wider net.
Exactly. MiCAR is all about creating a more transparent and stable crypto market. It wants to ensure that consumers know what they're getting into. And it aims to prevent the kind of wild volatility that we've seen, in the past. It's essentially bringing the same level of scrutiny and consumer protection to crypto that we expect in traditional finance.
So how does MiCAR actually achieve that? Crypto is such a diverse world with all sorts of different tokens and services. I mean, where do you even begin to regulate something like that?
MiCAR starts by creating 3 distinct categories for crypto assets. E-money tokens, EMTs. Asset reference tokens, ARTs. And then everything else.
Okay, 3 buckets. I'm intrigued. Break it down for me.
Sure. So think of EMTs as the stablecoins that are pegged to a single fiat currency, like a digital euro. MiCAR mandates that these EMTs must hold sufficient reserves to actually back their value, ensuring that they actually stay stable.
That makes sense. Stability is kind of the whole point of a stablecoin after all.
Exactly. Then we have RTs. These are also stablecoins, but they're backed by something more complex. So imagine a basket of currencies or even commodities. Now, because this backing can get a little more intricate, MiCAR sets even stricter rules for RTs to manage the added risk.
Got it. So we've covered stablecoins. What about all those other tokens out there? The utility tokens, governance tokens, all that jazz.
That's where the third bucket comes in, the catch-all category for everything else. MiCAR's approach here is all about disclosure. It mandates clear and comprehensive information for investors so they can make informed decisions. It's about preventing situations where people invest in tokens without truly understanding what they're buying.
Transparency is key, especially given how many different types of tokens are out there. Now, MiCAR tackles the assets themselves. But what about the companies providing crypto services? How does it address them?
That's where the regulation of crypto asset service providers, or CASPs, comes in. MiCAR lays down the law for anyone providing crypto services in the EU, from exchanges and wallet providers to even advisors. This is a big shift because it means everyone operating in this space will be playing by the same rules.
Okay, level playing field. I like it. Yep. But what exactly are these rules? What do ASPs need to do to comply with MiCAR?
Well, it's a pretty comprehensive list. CSPs will need to secure licenses from their national regulators. They'll need to implement stringent security measures to protect customer funds and data, and establish robust systems to prevent market manipulation. This includes tackling things like insider trading and pump and dump schemes.
Wow, that sounds like a lot for these companies to handle. It's almost like MiCAR saying, all right, crypto world, time to grow up and act like a proper industry.
That's a great way to put it. And while it definitely creates more work for CASPs, it also offers something crucial: clarity. With one set of rules for the entire EU, companies now know exactly what's expected of them, eliminating a lot of the uncertainty they faced before. And this clarity could even make it easier for them to expand their operations across different EU countries.
So it's not just about adding burdens. It's about providing a framework that allows the industry to mature and grow responsibly.
Exactly. And for investors, this means more transparency and stronger consumer protection. They can feel more confident knowing that the companies they're dealing with are operating under a strict regulatory framework.
All right, so we understand the what. Now let's talk about the when. What's the timeline for all of this to take effect?
The rollout is happening in phases. The rules for EMTs and ARTs kick in first, in June 2024. Then, CASPs have until December 2024 to become fully compliant. There's a final deadline of July 2026, which marks the end of the transitional period for CASPs that were already operating before MiCAR was enacted. By that point, every single player in the EU crypto market needs to be fully on board with MiCAR.
Okay, so the clock is ticking. Now for the million-euro question. Why should anyone outside the crypto world care about MiCAR? What's the bigger picture here?
That's a great question. And I think there are a few key reasons why MiCAR matters, even if you're not directly involved in the crypto market. First, it demonstrates the EU's commitment to taking the crypto market seriously. They're not just letting it operate in a regulatory gray area anymore. They're bringing it into the fold of traditional finance, recognizing its potential impact on the global economy.
So it's a sign of things to come, perhaps?
I think so. Second, MiCAR could have a ripple effect globally. If it succeeds in creating a more stable and transparent crypto market in the EU, it could very well become a blueprint for other countries to follow.
Interesting. It's like the EU is running a massive experiment,
Yeah.
and the world is watching to see how it plays out.
Exactly. And if it's successful, we could see a wave of similar regulations being implemented worldwide, bringing a level of consistency and maturity to the global crypto landscape.
That would be a pretty big deal. It's almost like MiCAR is setting the stage for the next chapter in the evolution of crypto.
Absolutely. And finally, even if you never touch a Bitcoin, MiCAR's focus on consumer protection and market integrity could have positive spillover effects on the broader financial system. By creating a more responsible crypto sector, MiCAR could contribute to overall financial stability, which benefits everyone.
So there's a potential for a win-win situation here. A healthier crypto market that also contributes to a healthier financial system overall.
That's the idea.
Right, we've covered a lot of ground here. It's time to shift gears and delve into some of the more nuanced aspects of MiCAR.
Looking forward to it. One of the most fascinating things about MiCAR is it's not just a set of rules, it's more like a philosophy, like a way of thinking about crypto's role in the financial world.
Oh, that's interesting. Tell me more about this MiCAR philosophy.
Well, at its core, MiCAR is about integrating traditional financial principles into the crypto world. Think transparency, accountability, and of course that all-important consumer protection. For years, crypto operated in a sort of regulatory Wild West with its own unique set of values and norms.
Right, the whole decentralized, trustless ethos. But MiCAR is essentially saying, hey, that's all well and good, but if you want to play in the big leagues, you need to follow the rule.
Exactly. And these rules are designed to foster a more stable and trustworthy environment for everyone involved. So if you're a crypto business operating in the EU, you can't just wing it anymore. You need to have proper governance structures, robust risk management procedures, and crystal clear disclosure policies.
It's like MiCAR is laying down the groundwork for crypto to become a mature and responsible part of the financial system.
Precisely. And for investors, this newfound maturity in the crypto market could be a real game changer. Imagine a world with less volatility, fewer scams, and a higher level of confidence overall. This could lead to much broader mainstream adoption of crypto.
That sounds like the ideal scenario. But let's play devil's advocate for a moment. Are there any potential downsides to MiCAR? Could all this regulation backfire in some way?
Well, one concern is that it might stifle innovation. Some argue that crypto thrives on its decentralized nature, its ability to operate outside the traditional financial system. Too much regulation, they say, could choke the life out of it.
So it's a delicate balancing act. You want to protect consumers and encourage stability, but without stifling the creative energy that drives so much of crypto's growth.
Absolutely. And critics of MiCAR worry that the strict rules and licensing requirements could make it difficult for new crypto projects to get off the ground, especially for startups that might not have the resources to navigate a complex regulatory landscape. It's a valid concern.
It's almost like a growing pains situation, isn't it? Similar to what happened with the internet. The early days were a bit of a Wild West, but eventually some rules needed to be established to ensure its long-term viability.
That's a great analogy. And look at the internet now. It's become such an integral part of our lives. Who knows, maybe MiCAR will pave the way for a similar kind of mainstream adoption of crypto.
That's an interesting thought. So we've talked about the potential upsides and downsides of MiCAR, but let's zoom out for a moment and think about the bigger picture. What does MiCAR tell us about the future of crypto regulation globally?
I think MiCAR is a sign of things to come. It's one of the most comprehensive attempts to regulate crypto that we've seen so far, and it's likely to serve as a model for other jurisdictions. We could see a sort of regulatory domino effect, with countries around the world implementing similar frameworks.
So the EU is leading the charge here.
In many ways, yes. They're setting the standard for how crypto should be regulated. And that's not surprising. The EU has always been a strong advocate for consumer protection and financial stability, so it makes sense that they would be at the forefront of crypto regulation as well.
Now, even though MiCAR is focused on Europe, could it have implications for companies and investors outside the EU?
Absolutely. Crypto is a global market. Even if a company isn't directly operating in the EU, if they're dealing with European customers or businesses, they'll need to comply with MiCAR.
So MiCAR's reach extends far beyond the borders of the EU.
Exactly. And that's something that all businesses operating in the crypto space need to be aware of. MiCAR is a game changer, and its impact will be felt worldwide.
It sounds like MiCAR is going to shake things up no matter where you are in the world.
That's a safe bet. The crypto landscape is about to change dramatically, and MiCAR is a major driving force behind that change.
Well, buckle up, everyone. It's going to be a fascinating ride. Speaking of fascinating, I have a question about something we touched on earlier. Stablecoins. MiCAR seems particularly focused on regulating these, especially EMTs and RTs. Why is that?
You're right, they are a key focus. And for good reason. Stablecoins are designed to maintain a stable value, usually pegged to a fiat currency or a basket of assets. This makes them incredibly attractive for payments and as a store of value in the often volatile crypto market.
They're kind of like a bridge between the traditional financial world and the crypto world, aren't they?
Exactly, and that's precisely why regulators are so interested in them. If stablecoins become more widely adopted, they could potentially have a significant impact on financial stability.
So MiCAR is trying to get ahead of the curve and manage that potential impact.
Absolutely. By setting strict rules for EMT and RT issuers, they're trying to mitigate the risks associated with these types of crypto assets. They want to make sure that stablecoins are actually stable, that they have sufficient reserves, and that they're not being used for illicit activities.
It's all about managing risk and protecting consumers, both at the individual level and at the systemic level.
That's a big part of it. Regulators are concerned about the potential systemic risks that stablecoins could pose to the financial system as a whole. Imagine a scenario where a major stablecoin loses its peg to the underlying asset. That could trigger a loss of confidence in the entire stablecoin market, which could then spill over into the broader financial system.
It's like a domino effect,
Yeah,
but with financial chaos instead of dominoes.
exactly. And that's a scenario that regulators are very keen to avoid. So by regulating stablecoins early on, they're hoping to prevent that kind of systemic meltdown.
So it's not just about protecting people from losing their money on shady stablecoin projects. It's about protecting the entire financial system from a potential crisis.
Precisely. And that's why MiCAR's focus on stablecoin regulation is so important. It's a recognition of the potential power and risk that these digital assets represent.
Okay, I'm starting to get the picture. But let's get back to the nitty-gritty of MiCAR for a moment. We talked about the 3 buckets of crypto assets, but what about the actual process of complying with MiCAR? What does that look like for a company on a practical level?
Well, it's going to be a significant undertaking for many businesses. First and foremost, they need to figure out which parts of MiCAR apply to them. Do they issue tokens? Do they provide crypto services? Once they've determined their obligations, they'll need to develop and implement a comprehensive compliance program.
Sounds like a lot of paperwork and late nights for compliance officers.
It definitely will be. There are a lot of moving parts to consider. They'll need to make sure they have adequate KYC and AML procedures in place, establish robust cybersecurity measures to protect customer data, and potentially obtain multiple licenses from different national regulators depending on their specific services.
So it's not a one-size-fits-all situation. Companies will need to tailor their compliance efforts to their specific circumstances.
Exactly. MiCAR is a complex piece of legislation, and compliance will require a nuanced approach. It's not something you can just check off a list and be done with.
So it's not a set it and forget it kind of thing.
Not at all. Crypto is a rapidly evolving space, and regulations are likely to change over time. Companies will need to stay informed about these changes and adapt their compliance programs accordingly. It's going to be an ongoing process.
This sounds like it's going to require a whole new level of expertise and vigilance from compliance officers.
Absolutely. MiCAR compliance is not something you can just wing. It requires a deep understanding of the regulation itself, as well as the broader crypto landscape.
All right, so we've talked about what MiCAR is, why it matters, and what it means for companies operating in the crypto space. But let's shift gears for a moment and talk about the human element. How is MiCAR likely to impact the people who actually use crypto, the everyday investors?
That's a great question. For many crypto users, I think MiCAR could be a positive development, by bringing more transparency and stability to the market. It could make crypto a more attractive and accessible investment option.
Especially for people who've been hesitant to dip their toes into the crypto waters because of all the uncertainty and volatility.
Exactly. MiCAR could help to build trust and confidence in the crypto market, which could lead to greater adoption by mainstream investors.
So it's like taking some of the fear and mystery out of crypto and making it a more mainstream investment option.
That's the hope. Of course, it's important to remember that all investments carry some level of risk, and crypto is no exception.
Right, it's not a get-rich-quick scheme. It's still important to do your research and understand the risks involved.
Absolutely. But I think MiCAR could help to create a more level playing field, where investors have access to clear and reliable information, and can be more confident that the market is operating fairly.
So a more mature and responsible crypto ecosystem overall.
That's the goal. And I think that's something that everyone from seasoned crypto traders to curious newcomers can get behind.
Now, we've talked about the potential benefits for investors, but are there any potential downsides for them? Could MiCAR make things more difficult or expensive for everyday crypto users?
That's a valid concern. One potential downside is that increased regulation could lead to higher costs for businesses, which could then be passed on to consumers in the form of higher fees or prices.
So it's like a trickle-down effect, but with compliance costs instead of tax cuts.
Exactly. And another concern is that MiCAR could make it more difficult for individuals to access certain crypto services or products.
For example, stricter KYC requirements, making it harder to open a crypto exchange account.
That's one possibility. Or it could become more difficult to trade certain types of tokens that don't meet MiCAR's requirements.
So it's a trade-off. More security and stability, but potentially less freedom and flexibility.
In a way, yes. But I think it's important to remember that regulation is often a response to problems or risks that have already emerged. In the case of crypto, we've seen plenty of examples of scams, fraud, and market manipulation. MiCAR is trying to prevent those things from happening in the future.
And I think most people would agree that a little bit of inconvenience is a small price to pay for greater security and protection.
Right. It's like wearing a seatbelt. It might feel a little restrictive at first,
Hmm.
but it's there to keep you safe in case of an accident. And in the world of crypto, where things can change so quickly and unexpectedly, having those safeguards in place can be crucial.
Right, so we've covered a lot of ground here. Let's take a step back and think about the long-term implications of MiCAR. What kind of legacy do you think it will leave?
That's a fascinating question. I think MiCAR has the potential to be a watershed moment for the crypto industry. It's a signal that crypto is no longer a fringe phenomenon. It's a mainstream force that's here to stay.
And that it needs to be treated as such.
Exactly. MiCAR is a recognition of that reality, and I think it's likely to pave the way for a more mature and regulated crypto ecosystem globally.
So MiCAR is setting the stage for the next chapter of crypto's evolution.
I believe so. It's a bold experiment, and it will be fascinating to see how it unfolds. But one thing is for sure, MiCAR is a game changer.
Well, on that note, I think we've covered just about everything there is to say about MiCAR.
Well, almost everything. There's one more crucial aspect of MiCAR that we haven't touched on yet, and it's something that I think will have a huge impact on the future of the crypto industry.
Ooh, intriguing. You've got me on the edge of my seat. What is it?
It's all about environmental sustainability.
Environmental sustainability. What does that have to do with crypto regulation?
More than you might think. MiCAR actually includes provisions that are specifically designed to promote environmentally friendly practices within the crypto industry.
Okay, color me surprised. I did not see that coming. This is where it gets really interesting. Tell me more.
Well, you're likely aware of one of the biggest criticisms leveled at crypto, especially proof-of-work blockchains like Bitcoin. Their massive energy consumption.
Right, all those computers around the world crunching numbers to validate transactions. It takes a lot of electricity to power all of that.
Exactly. And that electricity often comes from fossil fuels, which, as we know, contributes to climate change. So MiCAR recognizes this problem and takes a proactive approach, aiming to steer the crypto industry towards more sustainable solutions.
So how does it do that? Does it outright ban energy-intensive cryptocurrencies?
It doesn't go that far, but it does introduce requirements for CASPs to disclose the energy consumption and environmental impact of the crypto assets they offer.
Interesting. So it's not a direct ban, but more like a transparency initiative, almost like a nutrition label for crypto so investors can see the environmental footprint of what they're buying.
That's a great way to put it. The idea is to empower investors with more information so they can make informed decisions about which crypto assets to support. And for CASPs, it creates a powerful incentive to offer more environmentally friendly options. After all, who wants to be the company offering the crypto equivalent of a gas-guzzling Hummer when consumers are increasingly looking for the Tesla of crypto?
I see what you mean. It's a clever way to leverage market forces to encourage positive change. So it's not a heavy-handed approach, but it could have a significant impact in the long run.
Exactly. And I think this is a truly significant development. It's one of the first instances of a major regulation that specifically addresses the environmental impact of crypto. And it could very well set a precedent for other jurisdictions to follow.
That's a powerful message to send to the crypto industry. It's basically saying, hey, sustainability matters. It's not just about profits anymore. It's about building a more sustainable future for everyone.
I completely agree. And it goes beyond just environmental concerns. MiCAR's focus on sustainability aligns with a broader trend we're seeing across all industries, a growing awareness of the need to balance economic growth with social and environmental responsibility.
It's like MiCAR is saying that the crypto industry can't just exist in a bubble. It needs to be a responsible participant in the global ecosystem.
Precisely. And that's why I think MiCAR is so much more than just a set of rules. It's a vision for a future where the crypto industry can thrive while also contributing to a healthier planet and a more equitable society.
It's like we're witnessing the growing pains of a new industry, but with the potential to create something truly transformative.
That's a great way to put it. And MiCAR is playing a crucial role in navigating those growing pains and guiding crypto toward a future where innovation and sustainability go hand in hand.
Well, I think we've done it. We've really explored the depths of MiCAR, from its impact on stablecoins and CASPs to its surprising focus on environmental sustainability.
It's been a fascinating journey.
Absolutely. MiCAR is a complex and ambitious piece of legislation, but it's clearly a sign of things to come. The crypto world is changing, and MiCAR is at the forefront of that change, pushing the industry to evolve and mature.
I can't wait to see what the future holds.
Me neither. But that's all the time we have for today. Thank you for joining us for this deep dive into MiCAR. If you enjoyed this episode, be sure to subscribe to the Compliance Officer's Playbook podcast for more deep dives into the world of compliance and regulations. And for those of you who love this show, become a paid subscriber today for $4.99 and get full access to all premium episodes packed with insights, stories, and value you won't find anywhere else. The link is in the show notes. We'll see you next time.